Hello everybody. In the current affairs this week, the week ended 1st of June 2025. On 27th of May this week, the Central Board of Direct Taxes issued a press release under which the due date of filing of tax returns for the class of assessees who were supposed to file their tax returns by 31st of July has now been extended to 15th of September. This is an extension of 46 days. The reason for this extension was that the income tax form, the details to be submitted in the income tax return are undergoing structural changes, and these changes are aimed at simplifying the compliance and enhancing the transparency and also enabling accurate reporting. The moment these kinds of changes are instituted, then this leads to a development of a new kind of an integration which is required for the utilities to do the e-filing of the tax returns. So this is the reason why the dates have been extended. But the fact remains that this is a further step towards digitization of our tax administration. This week, the GDP, gross domestic product growth figures of India were released. The downside in respect of these figures was that the growth in last 1 year was the lowest in the last 4 years. But the good news is that for the quarter starting of 1st of October 24 and ending on 31st December 24, the growth rate of India was 6.4%. And in comparison to that, for the quarter starting of 1st of January 25 and ending on 31st of March 25, the growth rate was 7.4%. So this increase in growth in the last quarter, the quarter ending on 31st of March 25, was much beyond the expectations of everybody in the economic circle. One of the interesting assessments which I came across through this week was that the US economy is now behaving and it is showing signs like an emerging market economy. The reason can very well be understood by all these points which I will now narrate. In an emerging market, the government policies are uncertain. Today, every day, there are announcements of different kinds of regulations and tariffs in the US. Then, the fiscal deficit in emerging markets is quite high, and so is the case in the US, which is more than 7% of fiscal deficit. The interest rates in emerging markets are normally high. The 10-year G-Sec yield in the US today is 4.5%, and in a country like India, which is considered as an emerging market, the 10-year G-Sec yield is 6.21, merely a 1.75% kind of a difference. The 30-year G-Sec in the US today is 5%, while as in India it is 6.8%. Once again, the difference is less than 2%. Then, the weakening of the currency is always a feature of an emerging market. And the US dollar, in this case, is a falling or a weakening currency. Then, one more feature, there is a lack of free market operations. Apple, who would say that we would manufacture the phone instruments in India, would receive a communication from the president that if you do so, then we will slap you with tariffs. So this is against a free market kind of mechanism which is prevalent in emerging markets. Large corporations, large companies who are operating at times in emerging markets are not comfortable with the government policies, and they start a murmur or a thinking of relocating outside of that country. And this kind of a talk is happening in respect of so many of the big corporations in the US. So today, a country like US, which was considered as a risk-free economy or a risk-free investment, now fundamentally it is different, and it is showing signs of more like an emerging economy rather than a developed economy. On the Indian stock market front, Nifty 50 was unchanged. Nifty mid cap was up by more than 1%, and Nifty small cap was up by around 2%. The FIIs were modest sellers to the extent of around 400 crores, but DIIs, the domestic institutional investors, were aggressive buyers in the market to the extent of more than 33,000 crores. The Nasdaq and S&P 500 this week were in a positive mood, and they were up by around 2% each. That is all for this week. Thank you.